I got to talk to Austin Goolsbee, who has a slightly different take on the world than you did this morning. And one of the things that he said was if things keep going the way they're going, President Trump will have the worst year in the stock market in history. I asked him about what happens if you go back to when he was elected. But what's your take on what's going on with the market right now?
Well, look, Austin's a good friend. He and I have duked it out. He obviously was the chief economist for President Obama. I've worked as a senior advisor to Trump on the economy. The stock market has had a tough year, no question about it. The last 3 weeks have been very bearish. Today we see the market on a little bit of a rebound. My take is if Trump can get this trade situation settled with China, I mean, one of the reasons the market fell by about 500 points in a couple of hours yesterday was this news that he was going to get tougher with China. I think Trump might have to take a harder line with China, in the short term. But I think in the long term, we're going to get a deal. I think it'll be a better deal for the United States. And here's where I think Austin is wrong. If we get that deal, and I don't know when it's coming, and I shouldn't say if, but when, because I think it is coming, the stock market's going to explode once we get this thing resolved.
It's funny, a number of people we talk to in the marketplace go back to China and say we have to get that resolved. If we don't, it's real trouble.
We have to.
The president was on with Laura Ingraham just last night, and he addressed the conflict with China. Listen to what he had to say.
About the deal.
They'd like to make a deal right now. I just say they're not ready.
$250 billion additional tariffs if that deal doesn't go through.
$250 billion and have $267 billion waiting to go if we can't make a deal.
Are you optimistic? Scale of 1 to 10?
I think that we will make a great deal with China, and it has to be great because they've drained our country.
So the president said he thinks it's going to be a great deal. And in fact, the Asian markets moved up on that news in and of itself, just that slim a read. It shows how sensitive it is. But the president is trying to really affect fundamental change in the trading relations with China. That's not easily done.
It's not easy. No, you're right. And the Chinese have been almost indignant that Trump would actually force their hand. Trump is oftentimes, and by the way, I disagree with Trump on the steel and aluminum tariffs. I think those are a mistake. I don't like the idea of auto tariffs. But I tend to agree with them on China. Now is a good time to get tough with them. They've been cheating. They've been stealing. We estimate $300 billion a year of intellectual property is just stolen by the Chinese. I talk to businessmen and women, CEOs, all the time who say it's almost impossible to do business as an American company in China. You have to give up your trade secrets. You have to give up your patents. You have to give up ownership of your company. All these rules and regulations make it so difficult, and that's one of the reasons we've got this massive trade deficit. And Trump's kind of take on this is kind of right, which is that, when he said, well, why are you starting a trade war? He said, China started this 10 years ago. I mean, it is not a level playing field. It's not a fair playing field. And incidentally, if Trump could prevail here, where China agreed to pay for us for their intellectual property, where they agreed to lower their tariffs on our goods so that we could import more to them, that would mean lower prices for the Chinese. And in other words, it would be good for both countries. And in my opinion, Trump is not making any demand that is unreasonable here.
How much pain will we all have to suffer in order to get there? That's the question, because we already have tariffs on $50 billion and then 10% on another $250. Yeah. That's going to go to 25%. And now the president's talking about essentially the rest of imports from China. And there's a Citigroup report out that basically says if he does that, that's going to hit consumers really hard in a way they've not been hit before.
It's a hard question to answer because the ball is really in Beijing's court here. I mean, and Trump will go forward with these tariffs. I mean, he will not back down when it comes to China. And everything he said, by the way, in that interview with Laura Ingraham last night, it's not much different from what he said during the campaign. And I campaigned with the man, and that was very popular. I mean, the American people, I think, are generally behind Trump in terms of getting tough with China. And what Trump's view is on China, by the way, is a truism. China needs to trade with the United States more than we need to trade with them, and they're going to have to make some concessions here.
Let's talk about how the economy is doing overall, because it is doing well by any account.
You better believe it.
About it. Yeah.
It's not just doing well, it's doing phenomenally well. I mean, the idea that we'd have 4%, the last 2 quarters about 4% growth is something almost every economist, including my buddy Austin Goolsbee, would say, that's impossible. We can't get there, and yet here we are.
Totally right. And actually, I challenged him on that because a lot of people did not predict that would happen. Fair enough. There's no such thing as a free lunch. And we're paying for this stronger economy in the form of deficits,
yes,
without a doubt.
Yes.
1.5 trillion, something more or less like that. What is that going to do to the growth of the country over the longer term?
Well, it's a great question. When Larry Kudlow and I first sat down with Donald Trump a little over 2 years ago, and we walked him through all of this stuff, we basically made the point, look, the forecast for the economy over the next 10 and 20 years is 1.8 to 1.9%. We can't live with that. We can't possibly solve our deficit problem if the economy is growing that slow. We've got to get the economy up to 3 to 3.5%. He used to say, I want 5% growth. But, and if you get the growth rate up, and if we can maintain this at 3 to 4%, the revenues are going to come in. You're going to see more people working, more companies located here, more profits. That's a bigger tax base. So on the revenue side, I think we're fine. The problem, as you've identified, is the spending. And the truth is, this is going to be a big revelation to your viewers, but neither party wants to cut spending right now. The Republicans talk about fiscal sanity and fiscal stability, but they don't really believe in it, and Democrats certainly don't. And it pains me to say that because I do want to see the government reduced in a significant way, but we better get the economy growing as a first step to bringing the deficit down.
You're an economist. Every economist I talk to says true growth comes from one of two sources or a combination. One is more workers or more productivity. Those are the only two ways you get it. Yeah. Right now, it doesn't look like we're going to have a lot more workers as a practical matter. So are we going to get the productivity, and are we seeing it thus far in capital investment?
Yeah.
Is that really showing up yet?
It's a great point. First of all, we do have room on the worker side. We need more immigrant workers. We need more people on the sideline who are not working in America to get into the workforce, work for welfare requirements. There are a lot of people who could and should be working that just aren't, and we need to push more people. I estimate about 10 million people of working age who are not disabled could be working, and we got to get them in the workforce. But on the productivity side, look, my view of the world economy, we are seeing a lot of business investment. My goodness, I travel everywhere from Portland, Oregon to Portland, Maine, and everywhere in between. All I'm seeing, whether I go to Nashville, Tennessee, Memphis, Los Angeles, San Francisco, Denver, even Cleveland and Detroit, you just see, you see this here in New York. The structures that are going up, I mean, just in the 3-block radius from where we are right now. We're in the biggest construction boom in the history of this country right now. Did you know that? The biggest construction boom. Now, that's infrastructure. That's capital investment. That will lead to more productivity and will lead to higher wages for workers. So, yeah, I'm going to say on your show, we're at the cusp of a productivity revolution in this country that's going to enable that 3 to 4% growth for many years to come.
You heard it here first. One last point. You mentioned immigrant labor.
Yes.
I don't hear President Trump talk about that. You campaign with him. You know him well. Does he agree with you?
He wants a deal.
We need immigrant labor?
Yes. He wants a deal on immigration. He wants to build the wall first. He took a hard line last night on that show. He said, I'm going to bring the military to that border to make sure. So we got to get a secure border. But I really sincerely believe this. If we can get that wall built and the American people feel that the border is secure, then yes, Donald Trump will make a deal that will increase the amount of illegal immigrants that come into this country, the skilled workers, the agriculture workers, the service workers we need. And we can maintain the family-based system, but, the idea that you can bring your cousin in, no, that's not going to happen anymore. So I think the answer is yes. Trump would love a deal on immigration. I'm not so sure Nancy Pelosi and Schumer want one, frankly.